Welcome to the MoneyShow.com video network. We're talking with Carolyn Borodin about using Fibonacci to find good trading opportunities. Carolyn, thanks for being here.
Thanks for having me.
Well, everybody likes to look at Fibonacci and these levels, and it would be great to have price come exactly to levels and bounce off. How do you use Fibonacci as an inexact science when they're not bouncing right on the levels, although they may sometimes do that, but are trade signals that come close good enough?
Actually, if you're within, a few ticks of the range of the number or the price cluster, absolutely, that is close enough.
Okay, and how often do you find trades that are coming close but don't actually hit that you actually take? I mean, how does that talk about your decision-making strategy?
Well, let's say I have a pretty healthy cluster in the S&P market, and we get within 2 ticks of that zone, but fall short of it. I actually will start looking for a trigger on a lower time frame.
Okay, and how about the levels themselves? Are there more important levels? The 618 seems to be talked about a lot. Are there other levels that are more important, or are they all equal?
I don't think they're necessarily equal. I like to watch the 618 and the 1618 most of all. And occasionally, some of the other levels will turn the market, but what I really focus on is looking for the coincidence or confluence of price relationships coming together. When they come together, that's when I know that I have a good trade setup.
Give us an example of what that would look like.
Okay, for example, let's say I have a 618 retracement of one swing that overlaps a 100% projection of a corrective swing that also overlaps a 382 retracement of another swing. So I've got at least 3 price relationships that are coming together within a relatively tight range, and that identifies a key price decision in the market.
If you had 3, like you mentioned, come together, does that mean you're more confident with that? Would you put on more size?
Not necessarily. I do know that it's an important decision, but for example, we might have a price zone that comes together with 10 price relationships, okay, and that has happened. But that doesn't mean that because there's 10 levels that it's definitely going to hold that zone. But it does mean it is an important decision and that you should go to your trigger charts and see if the market holds and triggers.
How much of your trading do you feel is Fibonacci but ultimately kind of gut feel about if the level is strong or not?
I think maybe there's about 20% of the intuition because I really do rely heavily on the numbers if they do show up. But there are tons of trade setups that the market will blow through every day. So it's really the combination of getting the setup and then getting the trigger. Because if you don't get the trigger, you need to stand aside because the market will blow through quite a few of these price relationships.
Carolyn, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.